if you're tracking a range breakout, have expectations for each day, and if it continuously breaks those, right, moving down on heavy volume, my expectation is it's going to continue lower. You need to be in the right group for you to stack your probabilities. And
Obviously, in real time, it's not going to be as clean as a diagram, but it's about having proper expectations, understanding there will be those shakeouts and moves higher or lower. If a base pivot is lining up with the 50-day moving average, that's added evidence that more market participants are going to be focused on that level and potentially going to accumulate at that level. So the full range breakout, this is what I use. I use the undercut and rally as well as this one for the range primarily. We've got the entry through the high of the range that had been forming, set the stop at the higher low, which could be the low of the day as well. Your entry is through the highs. You can also have a follow on, tightness and top off your position there. But this is very clear cut. Anybody who's familiar with base pivots or trading breakouts, this is kind of the classic breakout, just likely on a smaller time frame. Within an overall constructed pattern, again, always with overall strong contacts in a stock that has high potential based on your system. Setting stops, right at the low of the day, low of the range, higher low, whatever you want to use. And as it makes progress for you, you can move up your stop to make sure this is a green trade. Rye, anything with this one that you want to double down on?
yeah, so if you're tracking a range breakout, have expectations for each day, and if it continuously breaks those, right, moving down on heavy volume, my expectation is it's going to continue lower. Hey, it didn't.
Right.
Why didn't it do that? Well, that's the nature of the market. It just didn't. So now you say, okay, that's an expectation breaker to the upside. Now, I'll continue to watch this range build out. I expect this pullback, okay, it's on low relative volume. My expectation is more sideways or down action. It goes up, right? So as you track this, you're working full time, you're day trader, you're swing trader, you're position trader, it applies. Because if you look at it on the daily or if you look at it on the weekly, that justifies your time frame, but you are tracking how this is forming. All of this range and the way I look at primary, my what I call the names that will make me money on cycle to cycle per se, I track those heavily. And when it's time to go at this point, this entry, when it's time to go, all my conviction for my position sizing comes from the fact that I've properly tracked it in this area. And I know this name is ready. This name is ready when the market's ready. This name's ready when the market's ready. This is ready to go. It breaks, even though the market may be poor, I would still place a bet on this. Then the market turns around, it goes even more, right? So make sure it's not about, hey, I see a pattern, and when it gets to this, I will make a decision. But you could take a step back and kind of just track it day to day, right? A pattern that forms over a span of multiple weeks and you're tracking it will allow you to size it so much better than you just say, I'm placing a line. Whenever I get the alert type of thing. That works as well. You could place an alert, never look at it, but your conviction, if you want to make a whole bunch of a large sum of money and you say, I'm going to put 25% of my account in this because I see how this is trading and it's so ready to go. That comes from tracking, the stock day to day. So
Yeah, and we'll have some guidelines in a future webinar with position sizing because I think we mentioned this before. You have to earn position sizing, especially if you're a stage 1, stage 2 trader. So just want to clarify that point. But also when it comes to alerts, how I would go about prepping for this trade, I'm tracking it every day. I'm always doing my daily routine, going through screens, coming up with the best ideas for the next day. Then I'm setting alerts before that ideal entry point. So I've got that twofold. I've been watching it and I've got the alert, making sure it's on my screen as it's passing through that level so I can watch the price action, see what relative volume is at that point, get that situational awareness where overall, how's my watch list performing today? How is the group performing today? How's the market doing today? All that adds to the conviction and adds to the setup. So yeah, that's pretty much it for this setup here. Here's a real life example. This is CIX a few weeks ago. This is a 65-minute chart. Got extremely tight here. If we had RMV over here, it'd be going to zero. This was the former base breakout, or actually this is a lower pivot range breakout. You can see this is actually an undercut rally of this range. Breaks
On
out,
earnings.
yeah, on earnings. It moves higher, then pulls back, tightens up, barely any give back. It basically stays at 80, for a few days here. Really tightens up and pushes through. And look at that, volume's not even higher. So if you're waiting for volume, you're late. So find what works for you there. But you've got the clear pivot, nice move. And this set up a few of these consolidation breakouts, range breakouts over the past few weeks here as the coal energy space has been kind of a leading group. Ryan, anything to add on this chart?
No, I think it's really perfect because the pullback, the way it pulls back is on, you look at this volume right here. So we're on a 65-minute. I'm sure if you pull this on a daily, this pullback that we
Yeah.
see is on relatively low volume, and it would outperform the markets. It would hold a 10-day for sure as it comes back in. And on a daily, you would see that same setup where you have enough of a consolidation for you to define. And then if the setup exists on daily, you could go down to a 65-minute. Now you have this range built out. And if it breaks that range, you can, put on a position. So
yeah, when we go over to examples, we should bring up this chart because, think about the overall context here. This green line is a base pivot. So it's consolidating versus the level. And this is another thing that I want to stress today. Confluence of levels is super, super important. So this tightness is happening against a key level that a lot of market participants are watching and accumulating versus. So we've got the overall context that just broke out of a base, pulled back into that base pivot, consolidated tightly, and then had a range breakout on a lower time frame. On a weekly chart, it makes sense. It's a pullback to the pivot. On a daily chart, it makes sense. It's a pullback on lighter volume against that pivot. And on a 65-minute time frame, the entry tactic is valid. So that's really key. So yeah, we'll definitely bring this chart up. Let's see. All right, so the next one, oops reversal. This is developed by Larry Williams. I learned this from JT over at Ticker Monkey. It's another very useful setup. It's a variation of the undercut and rally. This is a daily chart here. We've got a gap below this low, a rally below that low. So again, it's basically, it's the undercut and rally setup. We've got immediate traction, strong move, and it finishes with an outside day. Airbnb did this a few days ago where it had that gap up, it formed a range, had an oops reversal. So that's one way to have been positioned in that name. So yeah, I actually say that. So I'm reading my own mind. An undercut and rally on a shorter time frame or a higher time frame on a daily, it's a gap below the yesterday's low and rally up through that level. That is the pivot point for this setup. Yep, yesterday's low is the pivot point. I'm really reading my own mind. It should burst through the low. We talked about that immediate traction, immediate momentum. That's what we want to see here. And it's best used in a strong stock and a strong group where there's confirmation of a rally. Again, stack the odds in our favor, overall context, overall setup. You don't just buy this at 52-week lows in a stock which is, has terrible earnings, no story, everything's a fraud. You buy this in a strong stock that's a potential market leader that you can see that there's runway to the upside. And it's an expectation breaker, again, because we were expecting with this gap down below this range that we continue lower. Instead, the opposite happens. We rally strongly back through that low. So yeah, that's the oops reversal. Definitely a really nice entry tactic for those daily timeframes. So here it is in real life. Oh, here's Airbnb. So we have a gap up, forms an inside day, gap down below this low as well as the prior day's low, immediate traction. It had a nice rally for a few days, gain, it went from 140 to basically 150. And then it did have a pullback. Obviously, the market has been a little bit shakier here, but it's holding. But that's kind of the short-term entry tactic that you can use in an overall pattern, an overall base up the right-hand side above the moving averages that you can use to position in a name such as this. Ryan, anything to add on the oops reversals?
No, I think, it's just, you're cornering a name that's now seeing a reversal and its primary trend is trying to reverse to the upside. The big volume that it saw on earnings puts it on radar for a lot of people. If
I think it was a S&P
usually,
inclusion. It wasn't earnings, this one.
yeah,
Yep.
yeah. So included in the S&P caused this volume. So now there's some sort of catalyst to move price, but the primary setup is starting to go from this downtrend to this uptrend. Now you could be somewhat employ these bullish entry tactics for you to catch momentum to the upside. So
Yep. Perfect. And then here's a little bonus for everybody who's stuck around with us, which there's a lot of you guys here, which is awesome. So the opening range breakout, this is a tactic that's commonly used. I think day traders love this, but it can be used for swing traders and even position traders on that initial buy. A lot of people use a similar tactic to trade earnings gaps on day one. They'll wait for a 5-minute opening range breakout or a 3-minute opening range breakout, whatever it is, 1 minute. And basically, it's a pivot breakout on a short-term time frame where we've got a gap up or gap down. We form a range and we break through that range. I included this one on purpose. This was Tesla a few days ago because the initial breakout, the initial opening range breakout fails. And this is the reality of trading, especially intraday timeframes. It then reforms, holds the anchored VWAP from that day, and re-breaks out through that pivot. So this is a common variation. This one isn't going to magically work every time. That's not trading. You might have to try it a few times. And this one ends up working. And this is the Tesla gap up that I think ultimately the stock was up 10%, whatever, on that day. So definitely a very powerful entry tactic that is a lot more short-term time frame than most of the stuff we're talking today. And this works best when the whole market is rallying either on a gap up or on a gap down. And I see it, on the stop loss. Let me ask you guys, where would you place your stop? Where would this setup, if you enter here, logically fail? So Sean says low of the day. For an entry point like this, low of the day, you could do that depending on your time frame. For me, there's a tighter entry below the pivot low. So I think that means, the higher low. So Robbie says higher low. So yeah, I would place it below this low here, or, if you're being super tight, the low of that breakout day. So, for the context of the setup, the time frame you're on, you want to apply a logical stop for that time frame. But again, overall setup matters. This was the right-hand side. A lot of people are watching this stock. It was forming a tight range, and then it made this move. So the overall setup is super important. I know we're looking at intraday timeframes, but the weekly and daily chart have to be in alignment before you even consider this stuff. Ryan, anything to add on this?
No, I think it's a good exercise. We should do more of these examples. So
Yep.
let's keep going.
And John says below anchor VWAP as well, 100%. That would be very valid. A lot of institutions will purchase, and you can see this trended all day above that. So that could be your trailing stop on intraday time frame. All right. So getting into trading a pullback to support, and this could be support can be a key level such as a base pivot. It could be the first test of the 50-day moving average. It could be the first test of the 21-day moving average, 21 EMA, whatever it is. You're pulling back to a key level that a lot of market participants are watching. And ideally, this pullback is constructive. It's a drift lower versus a sharp drop. You're seeing decline in volume overall, as Ryan mentioned on the Uber example. And you've got the key points here. When a stock retests a key level and responds positively, we want to see that positive response. This can be a key moving average. You've got a few other examples of key levels. A confluence, again, with this confluence is really important. If a base pivot is lining up with the 50-day moving average, that's added evidence that more market participants are going to be focused on that level and potentially going to accumulate at that level. So you always want to be looking for that confluence and paying attention to that. That just adds the probabilities. How it pulls back matters. As I mentioned, we want to drift lower into that level. It may undercut that level. These aren't magic lines in the sand where the stock has to obey this rule where it stops right on the dot. there's likely going to be some wiggles and jiggles, to quote Stan Weinstein again, around that level, and you have to be prepared and position size accordingly if you do put on a position. Watch for a rally after the pullback, Brian Shannon, strength after the dip, all that stuff. So here in this diagram, let's walk through this. This dotted line is the key level that we're watching. This could be a base pivot, moving average, as I mentioned. We're pulling back in. Some traders I know, Charles Harris, Ross has mentioned this as well. As it's pulling back to that area, they might be starting to put on a little bit of size, a pilot position to see how it acts. But you can also wait for strength after a bounce. It might not hit that level. It might undercut that level. It might come right at that level and bounce. But always be prepared for a little bit more consolidation, some more shakes. So if you do buy shares as it's pulling back, you have to buy an amount that you're willing to give it a few percent. And you always have to have a line in the sand, whatever entry tactic you're using. So here we pull back, undercut that level as well. You're either stopped out on these entries if you did that, or you size these accordingly that you've got a line in the sand, maybe a few percent below the level. It rallies back through. You could buy strength as it's rallying back through this level, or as it rallies back up. It forms a tight range above that level, just above. You could enter there or enter after this pivot here. So there's a lot of different ways to trade these pullbacks depending on your style. These are just a few ways, but the key thing is, be open-minded for more shakeouts below that level, position size accordingly, and don't feel the need to go all in at once. And then you get stopped out, and then, you get disappointed. You had a loss and you take it off your screen, and then it tightens up again versus that level, and then rallies 5% and closes with a hammer candle right after testing the 50 days. So, Rye, anything to add on this? Because I think this is a really important slide for people to focus on.
Yeah, in terms of examples of this, the first pullback to 21 and 50 is what I like a lot, because those seem to be levels that are respected. The amount of volume I tend to give on a pullback matters more to me than on a breakout of a consolidation pivot. So if it's coming back in, or the slope that the slope of is it staircasing down, or is it taking the elevator, matters, and you could quantify or visually see that on the pullback. That matters a lot. How it, what the name is it an NVIDIA versus a SMCI, right? NVIDIA I would give a lot more of my money to than a secondary leader in that space. Tends to matter a lot more. There's all these very little, things that add up to how you can approach a particular name as well. So regardless of the market that you're trading, right? If you're in India and names that make, cement or something are big leaders in India at the moment, or something in the construction space, right? Because they're building rapidly, then that matters as well. Or if you're in the Canadian markets, and at some point in time in the Canadian markets, the cannabis names were the top ones, and you need to be in the right group for you to stack your probabilities. And when we get into position sizing, probably not today, but in future webinars, that matters a lot more. So I everything that you said there applies. I think when we talk real names, it will be much easier for people to kind of get into.
Yeah, absolutely. Yeah. And here on the next slide, I kind of highlight, the stops here. Again, where does the setup fail for you? That's what you have to decide for yourself on each of these entries. So that's the key concept that we want to always come back to. And again, we're not just doing this in isolation. This is an overall strong stock. The overall trend is up. And like Rye said, this is really good. The first pullback to the 50 or 21 EMA, 10-day even. A lot of people trade that after the breakout. We're looking for a strong stock overall pattern. And then this is short-term weakness, which is constructive still. And then we're looking for an entry tactic to apply once we see strength after that pullback. So here's an example with Uber to kind of cement things. This is a daily chart. This is prior in the year. We've got a base that forms super powerful up the right-hand side, straight up from the bottom. As Ross would say, it stutters at the base pivot a little bit. And, maybe because it's straight off the bottom, we get a little bit more consolidation. Rye's learning coding or something in his free time.
Let me exit out.
Yeah, there you go. But yeah, we form a consolidation here. It tries to move higher, it doesn't, but we get another pullback to this very key level, the base pivot. That's what we're focused on here. And look at that. We've got a little bit of confluence with the 21 EMA coming to pretty much that same level. And we did have a prior pullback to the base pivot, so that could be actionable as well, and here as well. But we're going to focus on this one. We've given it a little bit more time. It's a little bit more mature, where the 21 EMA has caught up to price. So now we've drilled down to a 65-minute time frame. This was the failed move higher. This was the prior pullback that was also actionable. And you can see, if you traded this pivot, it would have worked in the short term. But we ultimately still get a pullback. Volume isn't huge. We see an undercut of the base pivot, this blue dotted line here. We've got smaller ranges here. And then we've got, the entry tactics, the break through the range and move higher. You can see all the volume is coming in blue here, and it's very strong off this level, but we do get some wiggles and jiggles near that base pivot. So obviously in real time, it's not going to be as clean as a diagram, but it's about having proper expectations, understanding there will be those shakeouts and moves higher or lower. And that's why it's completely fine to wait for, confirmation that it's going higher, because then your confidence can be higher. But people who want to manage risk tighter and try it more times will trade down in here, versus if you want to, really position once, you might wait for this breakout through the clear level, which on a lower time frame is a stage 2 breakout from stage analysis. So that's it for the 65-minute time frame. Here's the 15-minute time frame. Again, we've got the clear level here and the breakout through that, and we push higher from that point. But you can see how it's found support at this base pivot. And even going back, Ryan, can you go back one slide for me?
Yep.
You see demand come in at this base pivot, and then we see demand come in here. You're learning the nature of the stock, and then that's when you drill down, when the patterns mature, the entry tactic is ripe, and you either trade, lower pivots, you're accumulating versus that level, or you're buying through that pivot. And that's how you position the name to see if that pullback will work.